Good evening, viewers. I'm Claresta Zhafirah, bringing you the latest in global commerce and finance. We begin tonight with a unified, sobering warning from the world's most powerful economic watchdogs. In an unprecedented high-level meeting, the heads of the International Energy Agency, the IMF, the World Bank, and the World Trade Organization have issued a joint alert. The ongoing conflict in the Middle East is delivering a major asymmetric shock to the global economy. What began as a localized geopolitical crisis has fully metastasized into a macroeconomic burden, threatening energy supplies, food security, and regional inflation metrics just as banks thought they were turning a corner. According to the joint institutional data, persistent security threats at key maritime chokepoints, most notably the Strait of Hormuz, have significantly disrupted global seaborne oil and liquefied natural gas shipments. The economic fallout is highly unequal. While advanced economies have shown marginal resilience due to strong technology advancements and alternative supply frameworks, the most vulnerable emerging markets are absorbing the heaviest hit. Rising fertilizer prices are stoking fears of systemic food insecurity across agricultural dependencies, while standard consumer prices take flight yet again. The numbers tell an aggressive story. Analytical groups like S&P Global have sharply adjusted their baseline forecast for the remainder of the year. Benchmark-dated Brent crude is now projected to remain above $100 per barrel through the tail end of 2026, a dramatic increase from pre-conflict baseline expectation formulated earlier this year. Consequently, consumer price indices are rebounding. In regions like Southeast Asia, transport and administered pricing are already adjusting to the shock, with airfares rising sharply over the last month due to soaring jet fuel costs. Central banks find themselves cornered. The highly anticipated global wave of interest rate cuts has largely stalled. Instead, institutions like Bank Indonesia have signaled tighter monetary measures to shield local currencies from an aggressively dominant US dollar. The consensus from many of the world's top economies is clear. The momentum of the post-pandemic recovery era is fading, replaced by a period of defensive economic fragmentation. The IMF and World Bank are urging global policymakers to step away from speculative market bets and aggressively fortify domestic supply chains. For everyday consumers, this translates directly to a higher for longer landscape, higher borrowing rates, stickier inflation at the grocery checkout, and elevated food costs tracking well into this next fiscal year. We will continue to track the markets as these geopolitical developments ripple through Wall Street and Main Streets alike. That is our economic brief for tonight. I'm Claresta Zhafirah. Thank you for watching and stay with us for your local news updates next.